Hi guys, hope everyone's doing great. This is a technical analysis video for the S&P 500. It is Friday 17th of April 2020. So it's important at times like this to keep an even keel, to keep a level head. We've all taken our platinum, combo and sapphire ruby classes, so we know how this game works by now. And as you can see, we've had quite the move in the S&P 500. There's some, people out there in secret Facebook groups telling people that Amazon's going to go to 4,000 within 2 years. But it's important to keep a level head and an even keel, because there's a lot of fear, there's a lot of doubt, there's a lot of uncertainty, and one could argue that one should free their mind. But really, how can you free your mind when US jobless claims is 20 million since the start of the shutdowns, and that's obviously lagging as well. So it's 5.2 million Americans. I mean, that must be, I've not checked, but it's a good 5-6% of the workforce, if not even more. It's probably closer towards 10%. So it's clearly a 1929 moment here, and we just have to be very, very careful. If I just bring up the Dow Jones, it might be easier to actually have a look at this on the Dow Jones if I just change that to the logarithmic chart. And so you can see here we've had quite the move, and this move here is typically what we call an ABC move. So that would be A, that would be B, and that would be K. So you can see here we've, in these bear markets, you do get these vicious counterwave rallies, but all they are counterwave rallies. And in fact, from top to bottom, this was, it was a 52% move, and then we ended up going lower. So it's important to keep level-headed, and it's important to understand that, look, we've taken the sapphire ruby class here, so we've got everything that we would ever need in terms of our technical knowledge. So just bringing up the 1929 sort of analogy once again, technically, if it's going to copy that, it could actually go all the way to double top, and then it could still go lower. Now, the title of this video is really to introduce something that that I've only just learnt about, and it's the Fibonacci retracement tool. So as you can see here, we have it here, and the most important numbers that we look at here are the 50 and the 61.8, and this is known as the golden ratio, or the golden pocket, or the golden child, like Raskas back in 99. Now you can see here, the price often has a tendency to react to this area. Okay, we had a similar sort of thing in 2007. If I just bring up the SPX here, in 2007, similar sort of thing. We've just gone over this. You get a vicious move down, then you get this sort of return to normal bullish sort of trap, and as you can see, this was approximately 50% of the retracement. And next thing you know, the world's ended, and we get a significant move down. Top to bottom, it was a 55% move, and I don't recall this kind of headlines, these sort of headlines being around this sort of time. Now, people out there in Facebook groups telling everyone that, look, in a wave 5, it's normal for the news to be disjointed from the economy, and Amazon's going to go to 4,000. But it's important not to listen to anyone at times like this. It's very, very clear that there's a very strong possibility of this being a 1. This is that counter wave bear flag. Next thing you know, we get that vicious 90% move down. And just bringing up the Fibonacci tool, if you sort of use this mode here, this is a really good mode actually. You can't actually see it on your screen because it's cut off, but if you look on the left hand side, magnet mode snaps drawings placed near price bars to the closest OHLC value. Okay, extremely useful. Okay, I've actually just come across this right now. To be honest, it's the first time I've been using it. You can see here, it will snap the mode, and we are literally right at the 61.8. Now this is the S&P cash, so we're just going to bring up the S&P 500 futures again. Once again, don't get too concerned with the word futures and S&P cash. These are just terms that Wall Street use to basically fool everyone, but we know what they did in 1929, so we're not going to listen to them. We're going to stick to our technical analysis as per the sapphire ruby classes. You can see here we're right at the 61.8. So keep a level head, keep an even keel, and we have to completely have in our minds that this could just be a counter wave correction. Next thing you know, we're going to go here. So that is definitely one possibility. Now, after the 61.8, you might say, hold on a minute, what if it continues going on? And then after that, well, 70% is not a retracement. You know, some people out there in Facebook groups use this for a particular reason. So we're not going to listen to anyone who uses that. In fact, we're just going to take that off because, you know, that's just for people who don't really know what they're talking about. So the one after that would be the 78.6. So they could actually, you know, Goldman Sachs could actually run this a little bit higher, and then basically it will then be a bullish sort of trap, and then they're setting the trap, you know, they're setting the trap for the fish basically, and then next thing you know, we get this movement down as well. And even then, we can actually go as high as the 88.6. I know it sounds ridiculous. How can you go that high and it's still a counter wave correction? But, you know, the way the volatility is run, you can actually get even as high as 3255. And even then we could double top. So we could still double top and come back in a very large ABC pattern. So that would be the A, that would be the B, that would be the C. In fact, let me just quickly take all that off. So you can see here, there's various counts. I mean, this entire pattern here could also be a head and shoulders. Now, if we have a look at Boeing, we know head and shoulders patterns can get very, very vicious moves down. You know, once again, if someone in Facebook group telling us that, you know, Boeing might go to 180 after earnings within 2 weeks, but we're not going to listen to anyone like that. You know, we need to stick to our combo classes, and they tell us, look, head and shoulders. So you got the left ball, got the head, right ball. If you take the distance from the tip to the base, then you basically take a vertical pole here, and this is the way I've always done it. You take the vertical pole sort of trend line, draw that here to here, and then you press Control C and Control V, and you can see that basically got you down literally to the lows. So, you know, head and shoulders is also a possibility here. You know, I don't want to bring in shampoos here, but it's important just to keep an even keel, because the last thing you want right now is to be, you know, doused in dandruff, right? You know, that's the last thing that we want, okay? Especially with the lockdown going on, you know, especially with 5.2 million Americans, the last thing we want is a major dandruff sort of issue here, yeah? So you see that? So that would be the left ball, the head, and then next thing you know, we've got this right shoulder forming here. So, and that also, interestingly, corresponds with what I've just said, which is the 50, the 61.8, and the 78.6. So we just have to keep an even keel here. And once again, you know, you can draw the neckline here, and then, as I've just said, you take the vertical distance using the trend line. You draw down from here to here, Control C, Control V, and then you add that onto here. Well, that gets you a move down towards 1391, which actually makes a lot of sense. It would make sense for the S&P to go down to 1391, because if I take everything off right now, convert that to the linear chart, and then you can also draw a trend line on the weekly. Also, you can connect this low, because that was a very, very key low. We can't just pretend the low back in 02 was not important. You know, that kind of gets you towards this line here, and that's very much how these markets work. They have these very, very nasty 90% corrections, and then yeah, fine, then we might go sideways and we might go back up, and you know, it's a very panicky sort of time. You know, we can't listen to all of these, you know, hip hop artists back in 1990s telling us that the Dow is going to go to 40k. They don't really know what they're talking about. So, you know, keep an even keel and you'll be fine. And if I just bring up the RVI, which is my favorite indicator, the relative vigor index, you can see here. I mean, if that's not a sell signal, I don't know what is. You know, I don't know what is. Every time that the vigor has just been completely losing, you know, completely lost our sort of steam and our effort, so to speak, we've had a nasty correction. So relative vigor index, the RVGI, I mean, these are, yeah, 10, you want to offset that style. We've got that signal line, perfect. So, you know, the RVGI is clearly pointing to a nasty, nasty correction here. So keep an even keel, keep a level head, you know, you go on the teachings. And I even asked my financial advisors, you know, I said, look, financial advisors, Keith, Kevin, what is going on here? The last time we all needed financial advice was right at the top of the '07 highs, and they gave us great advice there. They said, look, property looks really good investment. It's important to continue to be in the real estate video. So we know once every 20 years or so we need that financial advice. And I'll just play you a quick little audio transcript from my financial advisors just now.
Crashing, get out! You need to sell everything, put it in tether, man. It's getting crazy out here. I'm telling you right now, we need to put everything in tether. This market hasn't bottomed out yet. I think going to like 5,000. 5,000? Yeah. Market. I don't even call this a bear market. I call this a damn gorilla market.
So as you can see there, my financial advisor Keith Hodge was kind of explaining the Dow Jones really, and he was sort of inferring that a Dow Jones move towards 5,000 was very much, and once again that kind of gets you pretty much below the lows from 2008. Once again, this is all within the realms of possibility. We know it's a 100-year bull market, so it's not necessarily the case that only a 34% correction is going to be enough. I mean, this number could easily go to 20 million next week. So, we just have to be careful here. It could easily drop another 80%. And then essentially everything then resets to normal, and then we can start a new bull market, And I mean, I don't want to bring in too many indicators here, but if you would bring up the pitch fan, this is one indicator that I've been using for many weeks now, and it works really well. And basically all you have to do is swing the pitch fan from the major low to the major high, and then essentially you bring the cursor down and you clock that at 0. And what you need to do is then overlay that with this Fibonacci circles, right? Once again, you go to a major low and a major high, and then you draw the circular arrangement there. Now, my financial advisor Keith Hodge was explaining 5,000 on the Dow, and it makes perfect sense because that's right within, once again, 0.618. So this is everywhere. This number is everywhere. I'm sure if you go, for your 30-minute jog today, you'll see this number pop up all over the place. This is the Fibonacci circle for this entire move, and also you've got correspondence there with the pitch fan moving down, and you can see here. I mean, I've never seen such low vigor in my life. I mean, that is shockingly low. I don't know how this is ever going to turn. So, that's what we need. If we are bullish on this market and we're going to listen to, these 19s hip hop artists telling us, Dow's going to go 40k, Amazon's going to go to 4,000, CGC might go to 20 within 2 months, and, Netflix might go to 600, Apple might go to 600, we don't want to listen to these people. We're going to stick to the charts, and we're going to stick to everything that we've learned in our various classes. So, I mean, let me just take that off there and just bring it back to the S&P 500. So that's the current situation. The current situation is there are a lot of bearish, indicators. And, if you're a long-term investor, how can you buy a market when there's 5.2 million Americans who don't have any, who don't have any work? So yes, we're really hoping this pandemic slows down, these people get back into work. But, if you want to bet against the US economy, then good luck with that. It probably doesn't, it's probably not going to work out for you. And you can also see here live, we've actually gapped up here. So this in itself would be a bearish signal regardless of everything else. That is a gap up. That is a complete retail FOMO gap who potentially have missed this entire move, have now jumped in just before the weekend, and they've left a sort of island top reversal. So just keep an even keel, right? Keep a level head, keep an even keel, follow the teachings from your combo classes, and don't be surprised if you wake up next week, maybe we get some news over the weekend, and then next thing you know, don't be surprised if, as per my financial advisor, that the Dow is at 5,000 within 2 weeks. So keep a level head, understand these teachings. But there you go. And I'll try and do regular updates whenever I can. I know it's a very panicky time, very fearful time, so I'm gonna leave it there. Hope you guys enjoyed this video, and please do like, share and subscribe across your social media, and I'll see you again.
This is getting bad, man. We can put everything in tether.
Hey, look.
Let this market calm down. Now listen to me what I'm telling you. We're losing everything. You need to put this stuff in tether, right? When the market bottoms out.
Stop spitting on me, man.
You need to listen, man. When the market bottoms out, then you jump back in. Just put it in tether for now, cause we losing everything, man. Every day it's been going down. Every day. Every day is going down. I can't get one day where it's at least going sideways. Every day is straight down, man. Market ain't taking off, it's crashing. We're going into a Great Depression.
Look, man.
Yeah, you gonna hold them.
I think
you gonna keep holding. You gonna keep holding, and that gorilla gonna keep ripping your nuts off, man. I'm telling you, this is getting crazy, man. That damn gorilla came in there, strangled the barrel, and just took over the bar. We're in a gorilla market. Total. Keep holding it. You gonna be holding nothing pretty soon.